It's tardy. I was upstairs dealing with my kids, and life's crazy. I almost have the third any day now being born, and today, apologies for I'm a Canadian, so I'm gonna apologize. My teeth are really sore today. I got these new things called Invisalign. I have like these trays that I put in, and so it's kind of a cool little experiment. I got a decent little deal on it, so I'm, I'm getting it just to see how it works out, see if it straightens my teeth. And the side byproduct that actually was the main motivator for me was having these in now. When I sleep, I grind, so that'll stop me from doing any of that too, wearing these nighttime retainers. But right now I have to wear them during the day, so I could take them out, but I had them in already, so I thought I'll just leave them on. Today, we're going to talk about the wheel, running the wheel in the options trading investment world. This is one of the best strategies for investing in the stock market. I think if you built this, I'm going to talk about it in a second, but building a dividend portfolio using leverage and then ensuring a good cost base using selling puts, and then we'll talk a little bit about how you could use calls and things like that to make things better. So anyway, yeah, I gotta get straighter. My teeth are not very straight. They're all right, but it's gonna push things and align them and make them better. So anyway, I'm mostly the benefit is going to be no grinding and some better alignment and stuff. So I thought, you know what, I'm in a Lux Fire stage of my life and abundance mindset. I'm thinking that I can afford a little bit of money to do this, to take care of my teeth and take care of my overall my teeth won't wear down, they won't be grinding each other, so it'll be worth it in the long run. But it is painful today. First day ever having them in, and a little bit painful. We will talk today. By the way, I forgot. Today I was wearing green. Why was I wearing green? Because it is St. Patrick's Day. So happy St. Patrick's Day, everyone. That's something I will say to everyone there. Hopefully, I don't drink, but if you're a drinker, then enjoy a beer on me, or I guess for me. So in stock investing, I want to talk about how it compares against real estate investing, because on this channel I've talked a ton about real estate, and I continue to talk. What the heck is that? I continue to talk on this channel about how great real estate investing is, but you get to a certain point on your investing journey where you spend a lot of your time building your wealth and building up your time to be more valuable. And so all of that previous time you spent building your wealth and investing in yourself and making your time more valuable actually prices you as a high value individual out of the real estate market, especially on smaller deals. Because the time you have to put in to BRRRR a property, by that I mean you've got to potentially evict the tenants, fight with the tenants, you've got to do some management, you've got to manage the contractors, or at least hire a GC, and there's all these things go along with it, from financing to renovation, and financing is a huge thing. Once you're an established individual, sending all that paperwork in to get financing approved is a lot of work. So the BRRRR is financing on the buy. You first got to find the deal, a lot of work. Then you got to lock up the deal. Then you got to do all the financing to get the deal closed. Then you have to deal with all the crap once you've closed on it, like setting up all the utilities, fighting with tenants and contractors and a huge renovation, and then all that effort and energy that goes into real estate investing to get those great returns. It's work. It's your energy that gets you the higher return. As you build wealth, you realize there are other strategies that can get you a 20% return on investment or greater without having to ever lift a hammer or talk to a tenant or go through any of the work associated with real estate. So I like real estate as an asset class. I'll always be an investor in real estate. I still have a flipping piece. I'm good at it. I've honed my craft. I enjoy it. But a good percentage of my net worth now is sitting in a stock portfolio. So for me, that's the ultimate, is being able to be on my phone, on an app, just trading, checking out my portfolio, and it's super easy. I can control my schedule. There's no human element to it, which is really, really nice. And I've been doing really well, guys. Like, today I made $19,000 trading options. In the last week, I've made 50 grand investing in options. So at 50 grand a week, that's over $1 million a year, just dabbling around with options investing. That's huge. For me, that's huge. And I don't even have a large percent of my net worth in my options trading portfolio. Actually, I have probably 10% of my net worth in it right now, and I'm getting great returns. Now, real estate also provides me a ton of wealth. And so for me, that's still gonna be a piece of the portfolio, and I think it's safer. But I want to talk about the wheel. And I want to talk about how, and by the way, guys, if you have any questions, as always, this is the free coaching hour. Or half hour. I try to keep it to 30 minutes. The last 3 have been over an hour. But if you have any questions, shoot them in the comments. If I don't get to your question today, copy and paste the comment, paste it as a question or a comment after the video has been posted for playback, and I'll answer it in the comments. As well, if you're watching the replay, thank you for watching. Smash the like button. It's all appreciated. All the support really keeps the channel going, keeps me motivated to continue to do these videos. I've got some more stuff coming up soon. It's just so many things I've been dabbling in, so many different, I have like 9 business ventures or like things that I'm actively interested in. And it's a lot to keep up with the YouTube and everything when you have so many other ventures or ideas, and I got a family and everything else going on. So anyway, apologies for that too. I've been wanting to get a book out to you guys, wanting to get a course out. I partnered with someone on a joint venture partnership where they're doing a lot of the heavy lifting for me. So something is coming with that, but it's in the works. So stay tuned. Back to what I think is the best end game portfolio in existence. In Canada, as an example, if you see my previous videos, you know that each person can bring in a relationship $52,000. You don't even have to be in a relationship. If you're a single individual, 52 grand. But if you're a couple, it's 104 grand, $104,000 every single year, completely tax-free if it's your only source of income. So if you structure your entire portfolio to be dividends only, you could collect a significant amount of money completely tax-free. Between the tax-free savings account, the RRSP, and dividend investing, you can bring in, as a couple, $10,000 a month in Canada, completely tax-free, and enjoy all the benefits of being in Canada, like free healthcare and all the other great things that exist. So early retirement and FIRE in Canada, and even, I guess you'd call it like fat FIRE, or like the beginning stages of Lux FIRE, at $10,000 a month, most people can Lux FIRE. It's a pretty good lifestyle. And so let's talk about how you produce those dividends. That's what, I should have titled this video better, but that's really what I want to talk about in this video. It took me 7 minutes and 30 seconds to get to it. Here we are. I think that once you've built your wealth, the best way, or even if you're still building your wealth, if you don't want to be swinging a hammer and actively adding value to a real estate portfolio, or if we're in a hot market like we are now, a nice, stable, safe strategy is to use leverage at somewhere like Interactive Brokers. By the way, I will put a link in the comments after this video publishes. If you're going to set up an Interactive Brokers account, I have a referral link where I get some free shares, you get some free shares in Interactive Brokers. It's like $100 or something each for us both. So that's kind of cool. Click the link and sign up. Make a paper account, which is a fake account where you can play around, learn how to trade options, learn how to trade stocks, buy and sell. And then once you're comfortable, actually fund it with real money and do some investing. Interactive Brokers, though not the best platform from a user interface perspective, it is by far the best for options trading. It is by far the best for active traders, and it is by far the best, I think, for market data and a few other things along the way that just make it, in my opinion, the biggest thing of all, besides all those things, is the cheapest margin accounts anywhere in the world. You should have done that via referral. Yeah, I really should have. Definitely set up another account, and we can all get some. I think you get like $100. You get up to $1,000 in free shares, Interactive Brokers, which is kind of cool. Trading at like $80 a share right now. The minimum is you get 1 share, so the lowest you'll get is like $80 for setting up your account. So stupid. I set up a personal account and then set up I have a corporation that I trade in for tax reasons, and I forgot to refer myself to my own corporation. So I left like $200 on each side, so $400 on the table, not even referred my own self to Interactive Brokers. Like, or I could just, one of my buddies could have just referred me. I left money on the table. Don't be me. Be better than me, and get the referral link, and get yourself some free money. Get me some free money. Cool. I love Interactive Brokers. Can't say enough great things about them. Don't know how they make a profit though from their margin stuff, because they're lending right now. If you put $2 million in a it can be any amount. You can put $10,000 in, and they'll lend you back 70% loan to value on an auto-approved line of credit in the margin account. So you buy $10,000 in shares, they'll give you $7,000 line of credit at 1% interest. And it's like 1.5% to start, but it scales down to about 0.5% interest. That is 0.5% 5% interest, like 0.5%. We're talking prime minus 1.5% interest. Don't know how they're lending that. Bankers' acceptance rate that the bank is literally borrowing at is 1.5. So they're subsidizing as a private company. They're basically hoping you're going to borrow the money, and then I actually can't understand the logic. Maybe they're hoping you'll do a lot of trading with that money, and they'll make it back on the trading fees and the data charges. I don't know, but the cheapest 70% loan to value, you can go basically lever that up multiple times. So if you put $1 million in to Interactive Brokers, they'll give you a $700,000 line of credit at 1%. You can go take that $700,000, double down on stocks. So from $1 million to 1.7, then they'll give you 70% of 1.7. So they'll extend your line of credit another $490,000, so on and so forth, to the effect that you can take $1 million and buy $3.34 million in shares. That's huge at 1% cost of debt. Now, if you're buying the right types of companies, you're buying a nice diversified dividend portfolio that is tax preferred. Right now, the yields on the major big banks, Enbridge, Pembina, all the like utilities, oil and gas and stuff like that, as well as even a lot of the tech and utility plays, all that stuff paying between 4 and 7% dividend yields. Lots of companies out there paying great dividend yields right now with a cost of debt of 1%, levered 3.34 to 1. I'll talk about how we manage the margin calls and manage the risk with puts in a second, how you can buy puts to protect all of that downside so you have no downside. You buy insurance in case your portfolio drops so you can't lose money. 7% yield, 3.34 to 1. What happens when you put in $1 million and that buys you 3.3 million, let's call it, just round down, $3.3 million in shares. If you have let's even go down a little bit lower. Let's say you get $3 million in shares on just less than $1 million. You put 900 and something thousand in, and you get about $3 million in shares. $3 million, a 7% dividend yield, is $210,000 a year in dividends from companies that have been paying dividends for 50 years. You find solid blue chip companies that have been paying dividends for 50 years consistently through the last recessions, et cetera, and so forth, that have strong free cash flow. They'll continue to pay that through the next recession, through the next dip. The key being here that if you take that million, just shy of $1 million, lever it up at 1% cost of debt, you're looking at a total dividend yield after cost of interest of between 15 and 20% annualized. That's without any appreciation. Now we're going to run the wheel, the options wheel. I'm going to talk about what the options wheel is and how you run the options wheel on a solid dividend portfolio levered up like that to protect your downside, insure against any risk, and juice up your returns even higher by dropping down your cost base. So where do you start? If you don't know what it is, you got to Google what a call is, what a put is, basic options stuff. You can just there's a million YouTube videos on it. But the idea is that you're either buying or selling a put. If you're buying a put, you're agreeing to give someone your shares at a lower price at some point in the future. And then if you're selling a put, you're going to take shares to have them put into your account at some point in the future, usually at a lower price, in which case you get a premium or for writing that contract, like almost like insurance. And then on the call side, basically the idea is that in the future, someone might call your shares away from you. Let's talk about how you use that to mitigate your risk on your sweet dividend portfolio. You put less than $1 million in, let's say you got over $3 million in shares, a couple $100,000 a year in dividends coming in now. That's completely almost tax-free because you can deduct all that interest cost on the margin line, any trading fees. I'm sure you can find some write-offs for your portfolio, maybe a new laptop, whatever. You can find ways to deduct down to get to the goal is $10,000 a month in tax-free. So you take $200,000 in dividends you're collecting and try to get it down to $120,000 so you can stay in the tax-free as a couple target range, right? And so by less than $1 million a year, if you retired on like $900,000 a year, you could produce $10,000 a month super conservatively and super safely. That's where I think a lot of people don't understand. I think that this is not possible with stocks, but you can do that with, again, the insurance piece, using options to insure your portfolio in case any market drops. What do you do? So how do you start by buying this portfolio? You lay out the positions you love. Let's say there's like 50 companies. You want to be super diversified. You don't want all your eggs in one basket. You want to have a little bit in every company. I like no more than 5% of my portfolio, any one position at any time. So break it around. Someone just put in a question and said 900,000 in dividend stocks if it's levered. So if you would put $900,000 in, you should be able to borrow almost $3 million in total. You could in total equity positions. So you'd be borrowing, I guess, a couple $1 million. So you put $1 million in, you're borrowing a couple $1 million on margin at a 1% cost of interest with Interactive Brokers. That's huge. That's where most of the juice in the the squeeze comes from is that leverage, that cheap debt. That's what drove me to real estate. I didn't know you could go and put $1 million in a stock portfolio and pull out $700,000. By the way, you can do that in Interactive Brokers. If you wanted to get $1 million in stocks, you could pull $700,000 out, and as long as you were super insured using puts, in case any downfalls happened, you'd be okay to take that money and invest it elsewhere. So you could put $1 million in, pull $700,000 out, do private lending with that, buy real estate with that, and still have $1 million in stocks, unaffected, producing dividends for you every year, 60, 70 grand a year in dividends on $1 million, super conservatively. But I like to use margin to juice up my stock returns. That's what we're going to do in this example. And I think it's super powerful to now talk about how you acquire those shares. So let's say you lay out the shares you love in all these companies that, you lay out a list of, in my case, I have about 45 positions, like 45, 50 positions that I follow. They make up my portfolio. That's changing all the time, but it's pretty diversified. No position holding more than 3 to 5% of my entire portfolio. I would go and sell a put option on every single one of those positions, slightly out of the money. Basically, say the shares are trading at $20. I might put in a put to say, hey, I'd like to have the shares put in my account at say 17, and so that's, what is that? It's like 15% under the current price. So I'm like, hey, I like this company. I want to own it. It's a great dividend yield. I want to own it even more if I get 15% off the current price. So I just throw a contract out there. I go ahead and sell that in the open market. Someone buys it, there's a bid and ask, and it gets executed in a couple of seconds. There's a huge market that exists for people buying and selling these. So you put that contract out there, and you get paid a premium. So I say, hey, I want to buy shares in this company that I like for $17, and it's trading at 20 right now, but someone else is going to buy this contract and says, what if the shares fall in value? I want to protect myself against any major downfall. Anything more than 15%, I want to have a put that I can execute. So they take that trade. They say, sure, I'll do that. And they pay me $1 a share upfront in cash for that agreement at some point in the future. So we might say 60 days from now, if the price is favorable, which means the price has fallen, in this case with a put, they'll put those shares in my account. So I'm like, cool. Let's say a company like Enbridge that I like. I might say, hey, let's just pretend Enbridge shares $20 a share. It's not. It's like, $50 a share or something. But at $20 a share, let's say that the shares fall to $19. They go down a little bit. They got a dividend the whole time they're holding it. I didn't get the shares I wanted. Bummer. I still made $1 a share for nothing. So on an options contract, you get 100 shares per contract. So let's say I bought 5 contracts. If I went and tried to acquire 5 contracts of Enbridge, and didn't get the shares, bummer. I just go sell another put I'll just keep selling puts and keep collecting premiums until I eventually get assigned the shares that I wanted to own anyway. So that's the idea. You do that with every single position in your portfolio. So you might write 25 different positions, a bunch of option contracts on all of them, just for selling puts to acquire the shares that you want. So that's one strategy to acquire your portfolio. What ends up happening is it might take 2-3 times, depending how far out of the money you wrote that contract that you sold. If you wrote the contract at like $19.50 and it was trading at $20, you might just get like half $1 off a share, which is still free money. Like, why would you go buy the shares? Why would anyone go buy shares in the open market when they could just sell a put and get the shares at a 5% discount? You can buy any stock right now on the open market for a discount. It's like, people didn't know that. They can use options to buy any share in any company, basically wholesale, right now using an options contract. So that's kind of cool. That's where I start with people. I try to explain options, try to explain how options contracts can make your stock portfolio more profitable. So you'll start probably on average getting about 10% discount, sometimes even 20% on the positions that you wanted to buy anyway. You're going to take your $1 million and buy, $20,000 in a bunch of different companies, whatever, 50 positions. Instead, now you've taken your $1 million and you've only spent 900,000 of it, and you've collected 30,000 in premiums on buying those. So you're paid to buy the shares you wanted at a discount. That's selling puts. Eventually, you'll get all the positions you want in all the companies that you want. You might have to get closer to the money if you really want that position and have it in your portfolio. You might write something closer to the money. The closer you get to the actual stock price, the better the premium you're going to get, because the more chance you're going to be assigned those shares. But if you want the shares anyway, then that's sweet. That's just a more discount on the shares you want to buy anyway. So that's, to me, where it's like, okay, that's a no-brainer. I can go buy shares right now at a discount. So I'm starting, compared to someone who just bought a stock portfolio versus someone who's using options to accomplish the exact same thing on their stock dividend portfolio. You're already way ahead. You're already 5-10% ahead, return annualized right away because you got your shares at a discounted cost base. And some of the stuff probably took a couple contracts. So you might get a pretty good discount from all those premiums you were collecting and selling insurance on shares you want to own anyway. So eventually you get all those shares that you own. Sweet, awesome. Then you go and sell, those are all naked puts, by the way. Naked means you don't own the underlying share. You're wanting to get the shares. Then you go and sell covered, which means you own the shares, covered calls on those positions. And you're selling insurance again, but this time you're saying, hey, I'll sell my shares. Let's see about those same shares at 17, they got put in your account. The share floats around from 18, 19, $20 market price, whatever. And you might go sell a call at 22 and say, hey, if the share price gets to 22, I'll sell my shares to you. But for the right to buy my shares at 22 in the future, I'm gonna need $1 a share premium. And so it may happen, it may not. If the stock jumps over $22 in value, whoever you sold the call option to will execute on it. They'll exercise the option, and it'll be a position where you'll lose your shares. They'll call and they'll take your shares. But that's fine because you bought them for 17, just sold them for 22, and they paid you $1 a share to sell them to that person in the call option. What's more likely to happen is most of the dividend stuff you're holding will kind of stay sort of flat in the short term anyway. You keep writing call options on it and keep collecting premium, juicing up your dividend return. So more likely than not, you'll continue to collect money and basically own the shares, collect the 7% dividend yield, which is levered 3-to-1. So you're really collecting 20% annualized dividend yield, and you're collecting premiums on selling these calls that are sort of out of the money. And at some point, you may, if the stock shoots up, you may lose some of that major appreciation. That's the only downside with doing this is instead of getting, if we have a 20% bull market, you're not going to collect that whole 20% ride. Just get your dividends and maybe you set yourself up for 10% appreciation. You've capped your upside. But you take, now here's the advanced level. You take those premiums that you're putting aside from the covered calls that you're selling and you buy some way out of the money puts. Or maybe even like you could go close to the money depending how expensive it is for each and every company which you're trying to insure. But when you buy a put, instead of we were selling a put to acquire shares, when you're buying a put, you can put your shares in someone else's account in the future, right? So at a set price that protects your downside. So let's say you go sell a put at 16. So if the stock price ever falls to 16, you now have an insurance contract to protect against a margin call. So now if the stock goes down in value and your dividend portfolio takes a crash, you don't care. Interactive Brokers comes calling for their margin because like, hey, your portfolio has fluctuated in value to the point where you borrowed too much. Cool. Here's my puts that I bought. Those are way in the money. We got lots of money. Just cash those out and we'll cover your margin call there. And that'll keep the portfolio sort of stabilized. It does cut into your overall return a little bit, but you can still get an easy 15-20% annualized doing this. And then there's some more cool stuff you can do with strangles or you can just play between the prices, setting min and max so you can't lose. But just really an attractive way, I think, to build a stock portfolio. A little bit more work, maybe 30 minutes a day to maintain this. Once you understand how to do it, it's like investing in real estate. You can take a course on it once you learn and you realize it's not that hard to do. You're like, oh, okay, why isn't everyone doing this? That's what I'm trying to figure out. There's people out there, and a lot of people hate margin too. They're like, hey, you should never borrow money to buy stock. That's a bad idea. But then there's that whole school of people from Dave Ramsey's camp that say you should never borrow money to buy real estate. You should never mortgage on your house. That's also terrible advice. You should go borrow at 2% interest on your house and invest that somewhere where you can produce a 10 or 12 or 20% return, and then you'll be way, way ahead. So I think leverage is the best thing you can possibly do as long as you manage risk. Managing risk is key when you're borrowing money. Making sure that you're borrowing it for the right reasons, putting it into safe things that are not super high risk. As an example, don't go on margin and buy cryptocurrency. You don't go buy altcoins. You don't go buy Bitcoin to the moon because Bitcoin produces no cash flow. Even if you're staking it, it's not enough in most cases to protect against downsides. You could, in theory, have it as a small percentage of your portfolio. I like to dabble. You guys know that I'm dabbling in the mining a little bit just to try it out, just to acquire some currency. I'm all about that. I like that because I own the hardware, and the hardware I can sell for what I bought it for, plus all the crypto is free, and the payback is less than a year. So, am I still there? Oh, it doesn't log in. Literally been texting this person all day, trying to get a hold of them, and me now, when they know that I'm live. Godfather. It's okay. It's okay. Where was I? I lost my train of thought here, guys. I'll do some Q&A now, just so that I can figure out what's going on in the chat. Okay, so in the past, you had experience converting the property into legal triplex or a fourplex. Could you share, your experience in the process? How challenging was it? And as well as some tips and tricks. Yuri, I've done so many live Q&As where I talked about duplex conversion, triplex conversion. I've given tons of tips, so check out some of my old videos for that. But is it hard? No, nothing's hard really. Is it time consuming? Yes. Are you going to spend 6 months or a year fighting with the city? Yes. Building permits in London, for instance, I submitted a building permit in September on a duplex conversion, and I've still not heard back from the city. And I hired an engineer to do the stamp drawings. I'm thinking about calling the manager. I mean, like, what the hell? Isn't there a 15-day timeline? Technically, they can respond back. And any responses after that have an unlimited amount of time to which they can issue permits. So really upset with how crappy the city of London's been with responding to permits throughout COVID. September to now is not acceptable on a permit that's been accepted. Just ridiculous. So right now, the conversion process, expect, legally speaking, you can't rent the property out when your permit's accepted. Until my permit is accepted and I've converted from commercial to residential duplex, I can't do anything with the property. So legally, I can't rent it out. City's like, just leave it vacant for a year. And then they talk about having a homeless issue. Then they talk about having a housing crisis. Makes no sense. Their policies make zero sense. My experience dealing with the city, pain in the ass. My experience doing duplex conversions, with contractors, huge pain in the ass. But, I mean, there is a good return in doing it. You can, if you get lucky and the city responds quickly and you get a good inspector and you get a good contractor and everything goes well, you can make a huge upside. There's also the risk that the city says no, or the city says minor variance, and that takes a year. And in those cases, the profit isn't as good. But it's still good, for sure. There's a lot of roadblocks you have to go through to make something legal, but it can be profitable. There can be a really good profit in doing it. Sometimes just buying a single family and cleaning it up, you can double your money really easily doing that as opposed to doing the conversion route. My preference has been my time is super valuable now, and because I figure my time's worth $300-400 an hour, it just isn't worth, in my opinion, it just isn't worth going through all the hassle and all that time investment to get that smaller return. My return on time just isn't worth it. So definitely you can do it. But yeah, do you regret your design selling it? So Yuri, every sale I've made up until now has been for a specific purpose. It's been to raise capital for another deal. It's been to fund something else. So in most cases, my sales have not been a bad idea. But yes, like in hindsight, everything has doubled in value in the last 2 years in London, right? Like I was selling properties for 300 that are now almost worth 500, right? Like almost a double. And so it's wild how much appreciation we've received. It's like saying, hey, do you regret selling Bitcoin at 5,000? Like, of course, in hindsight, yes. But at the time, I made the best decision with what I had. I had a good amount of equity in the property. It wasn't getting me a good return on investment. I didn't know if the market would have continued to appreciate at the same rate that it has. And so with the information that I had, I sold a lot of these properties off, and it's been good. I did a single family to triplex conversion, and we bought it for 205. We sold it for 450. Someone else just resold it, I heard, for like 650. So of course we left some money on the table, but that's life. In a year, I took 205 to 450. And I think our renovation budget was less than 100,000 for sure, all in. So we did well on the project, and so you can make good money. Was it a lot of work? Yes. I was there almost every day, fighting with the city and meeting inspectors and whatever, and dealing with engineers and whatever else, and a lot of contracting issues, et cetera, so forth. So there was a lot of stress with that, but did it pay well? Yeah, in that situation it did. I know people have gone through the same thing, and the city said no at the end, had some issue, and the parking didn't meet whatever, some issue happened, headroom in a basement, unit made illegal, and then all of a sudden lost too. So you can go through all that stress and not make the big payout. That's the risk with development. That's the risk with the same thing with converting units. So you gotta make sure you do your homework first to make sure that the unit is for sure going to pass. Ruben says, hi Mike, thanks for the information. Hey, no problem. Should have done the IB referral 1 episode ago. Might sign up for another free account. There you go. Seema says, hi Mike, I'm thinking of buying a franchise. Cool. yeah, I mean, there's lots of opportunities to buy businesses and do really, really well. The challenge of buying franchises is often you have to put a lot of time into them. They often have requirements that the owner has to be involved. So just look into all that and make sure it's a good fit, and it can be really profitable for sure. Um, if you did interactive brokers tutorials on YouTube, it would be as popular as a teenage girl's makeup videos. Maybe I should. I'm not an expert, but maybe I should. Maybe it would do well. Maybe I'll do a video like that, right? I have to get a software to screen capture, right? And that sounds like a lot of work, but I could do it. Could do it. Ruben says, can you talk about private lending? What interest rate ranges? How much interest per month for 1,000? So you're trying to get $1,000 a month in interest. So if it's $1,000 in interest, you want, $1,000 a month means you need like 100 grand invested approximately at 10% return. So something like that would be roughly where you'd want to be. If you invested just $1,000, that would produce you like, I don't know, like $10 a month, something like that. I don't know. People don't really want to borrow like $1,000. You need a larger sum to really make it worthwhile, going through the paperwork and the struggle. William says, evening, Mike. My question tonight is, what are you doing that you weren't doing when you made your first million? What new thoughts have you discovered or taken away? Well, if you follow my videos over the last 3 years, you'll see the evolution of my thought process. I was not talking about this at all. The same stuff I'm talking about now was not something I was talking about a year ago, 2 years ago. I had no idea that you could borrow so cheaply. I knew at Questrade, I used to have an account at Questrade and did a bit of trading. Maybe 10 years ago when I was 18. And I didn't know. I used to borrow on margin. Like I was 18 years old, I was buying companies like Standard Silver Resources before there was a merger thing. But I was buying companies like that on 2 or 3 to 1 leverage, but at 7 or 8% cost of interest. So that was where it didn't make a lot of sense to borrow on margin, because my cost of debt was so high. There wasn't a way to make good profitability. But with 1% cost of debt, it's literally free money. Take their money and use it to get a higher yield. As the interest rates creep back up again, which they probably will a little bit, we'll have a conversation about how to manage that and how that'll affect things. But right now, it's just like a free-for-all of money printing and such low interest rates that you're a fool not to take advantage of it. So that's something new that I've been talking about. And I didn't know back then. This is something recently I learned with private banking and with interactive brokers. You can withdraw 70% loan to value at any time on prime minus interest rate. So that's super attractive. Like I have mortgages on properties that are prime plus. So I didn't realize you could borrow for stock investing in companies you love, that you want to hold, to pay solid dividend yields. And in many cases, the dividend yields are higher than the cap rates on properties in my local market. So the return's actually better, even if there's no appreciation in the stock market, holding stocks than it is holding real estate. And both are in a bubble. Both are, people argue are overpriced, whatever. Who knows? Like if they continue to print money, inflation will carry the prices higher. But something I didn't think about before, and that's something that definitely has changed. It's been a paradigm shift for me that I'm like, yeah, it's just so attractive, so attractive. In the last week, I locked up a Sarnia property, another Sarnia property. My brother down there is doing the renovations on it, so it's been fun helping him on his journey. And so now we have 2 projects in Sarnia going, and technically a third one, but I'm only a minor partner on the third one. I was more just helping with getting things organized at the start. There are literally a dime a dozen idiots making trades on Questrade tutorials. Seriously, Mike, if you make interactive brokers videos, you would get to 100,000 subs easily. Cool. Yeah, maybe I should create some videos on stuff. If that's valuable, let me know in the comments afterwards. Smash the like button and let me know in the comments if that's something that you would find valuable. Maybe it's something people would watch. I don't know. I feel like it's pretty dry. So I don't know if people would want to watch that, but maybe. Future Wiz says it before, and Mike retired at this age. I'm just starting my career. You got to remember though that like where I came from, I moved out on my own at 17. Like I was I moved out of my parents' house, didn't go back at 17. My mom's a single mom. We didn't have a great situation. So I became mature quickly. Lisa and I, my wife, have been together since then. We've been together 13 years this November. So I was living with her while I was, 17 years old. So you got to remember that I grew up with a different life. I'm not the stereotypical person, right? don't compare to me. It doesn't matter what I've been able to do. I think that to each their own, and find what works for you, and find a way to unlock your best path, right? And whatever that is. For me, I was lucky enough to realize that at a young age, poverty sucks. Growing up poor sucks. And I realized that money is everything. Money's the oil lubricant that runs your car. It's not, you know, it's necessary to have a good life, but it's not everything. I realized that time was everything. And so then I evolved at 18 to finding, I was 18 years old, going into my second year of university, and realized that the CEO life, or the fancy, like working 100 hours a week life, wasn't what I wanted. I wanted to unlock my time, and I'm lucky enough to realize the power of compound interest at a young age. And I was like, geez, every dollar I save now is $10 later if I invest it smartly. And so I just saved like a mother. I worked really hard, full-time job since I was 17. Even when I was in school full-time, I was working a job to save and invest, right? And that got me into real estate at 19, and et cetera, so forth. And I've been investing ever since. And the time has been my greatest ally, right? And it will be my greatest ally. The compound interest is what's going to take me to billionaire in my life, right? Like, all I have to do is just keep growing at 10 to 15% a year, and you're there, right? Because money starts compounding and really nasty huge once you let it compound. You don't touch it, don't spend it. Ruben, by the way, if you want to see my stock picks that I like, you'll see a lot of the stuff that I'm trading on, and then stuff that I'm investing in. I shared on my Instagram at Mike Rosehart. So follow me at Mike Rosehart on Instagram, where I share my stories. A lot of the positions that I'm holding. Actually, 3-4 days back, I shared half of my, not about 80% of my entire dividend stock portfolio. You can see a lot of the titles that I liked, a lot of the stock names that I like. So you could mimic my portfolio if you wanted to, and do what I'm doing. I'm not necessarily right. I provide no financial advice of any kind. Talk to your own financial advisor, your own accountant, et cetera, so forth. Don't sue me, bro. To quote Meet Kevin. As says, for capital gains when selling a home, is it a flat tax rate or is it a marginal tax rate? What about business income? So capital gains tax, the way it works here in Canada, is half of every capital gain on a stock or a sale of a house or rental or whatever. Half of all capital gains are tax-free in Canada. That is a myth right there. Most people think it's half tax rate, but half of the gain is automatically tax-free in Canada. The other half is taxed at your marginal tax bracket. So if you're in the 20% bracket, 30% bracket, 40% bracket, you pay on half of the capital gain against 40%. So if you had a $100,000 capital gain, 50,000 of it would be tax-free. 50,000 of it would be taxed at your top marginal bracket. Or not your top marginal bracket, but your most recent, I guess, whatever bracket you're in based on income. So it would just be added like regular income and be taxed. So if your tax bracket is 40%, then your marginal tax bracket is 40%, then your $100,000 capital gain, 50,000 of it would be taxed at 40%. So on your total $100,000 capital gain, at a 40% tax rate, you'd pay about $20,000 in tax. So your effective tax rate on a capital gain is 20%. Capital gains are amazing. It's the best way to earn money or to build your wealth here in Canada. Business income is taxed at your top marginal bracket, all 100% of it. Interest income, same thing. All types of active business income, same thing. So there are not advantages to, there are not a lot of great advantages to earning income actively. Better to earn it passively. Better to buy rental properties for cash flow. At a higher tax. I switched over to the Bell internet. I think Rogers is down. Switched to Bell. I don't know if it's any better. That's why I have two internets, because like one of them goes down, time to have another internet. I hate internet here. The internet in London is just terrible. Plus I'm on Wi-Fi, and Wi-Fi is terrible too. I think I'm back. Okay, I'm back. Hello. I gotta wrap this stream up. I started late and it's almost my daughter's bedtime. Hopefully by the time I see you guys next week, I'll have my third child born. So exciting news, about to go through the home delivery process for our new child. Home birthing with midwives. That's the only way to do it during COVID. Where was I? Okay, I found where I was. if you buy 100 shares of XYZ, can you sell a covered call immediately after buying them? Yeah, as soon as the trade settles and you have the shares in your account, you could then sell a call. I mean, you could actually, if you were, if you really wanted to, you could sell a put that's close to the money, or even like, say the stock price is 20, you could sell a put at 22 expiring Friday, and it's very, very likely you'd be assigned the shares. Probably be a huge premium associated with that. And then you could also just sell a call at the same time. So you could sell a put and a call, and then by the end of the contract, you could have the shares. It can start off as a naked call that you sold, and it could become covered once you've acquired the shares. So you can do a call, sell a call that's 2 months out, and do a put that's a week out. And so in a week, you'll have the shares, and the call doesn't happen for 2 months. In theory, during that time, they could always exercise their contract. It's always a possibility, but at least you'd have the put there to protect yourself, right? Actually, yeah, if you want to protect yourself, you'd probably, the better way to do it would be to buy and sell a put or buy and sell a call to protect yourself. But yeah, you could in theory do that. Hey Mike, Michael here in the US, recently retired at 28 with 13 rental properties, and I have a stock portfolio at Interactive Brokers, been on Invisalign for 10 weeks. Hey, cool. Michael Lynn, looks like we got a lot of similarities. That's sweet. Congratulations, by the way, on early retirement. I've been doing it now for 2016 December, gave my notice, but I didn't quit until February 2017, I think. 2018, 2019, 2019. Holy, it's been more than 4 years since I haven't had a job. I guess I've been retired for 4 years, but you guys gotta remember, I'm actively involved in so many things, right? Like I spend 6 hours, 7 hours a day being a dad. And some people call being a dad a job, right? Like I'm active in my family life, or like I do an hour to a trading a day, and I do not much in real estate, a couple hours in real estate, but again, like I'm actively doing stuff. So some people call me an entrepreneur, some people call me retired. Call me what you want. Mike, where did you study options? What resources do you use? David, two that I'll recommend, and I'll put a link in the comments for. One is tastytrade.com. They have a free course that overviews everything about options. It's a fantastic course. I haven't finished it, but I perused it, looked at the first couple things. I studied the Richard Ivey School of Business, Ivy, and so I took some finance courses there where I learned what a call and a put was, and basic. I've been trading since I was 18. Before I went to Ivy, I'd been trading in stocks. I hadn't really done a lot of options trading, but I sort of dabbled. But Tasty Trade gave me a refresher, which was nice. And I'm gonna be doing Erwin Cizito's Stock Hacker program as well, which is it's a Canadian focused, very beginner's course to options trading. And I have a referral link for that if someone wants to get a little discount and hook me up with some commission for signing up for that. Cool. You could also just find it all out for free online. The cool thing about doing the stock hacker thing and paying for that would be, if you're serious about it and you want to invest, I think it's like $5,000 or something ish. If you're going to invest that kind of money, you need to make sure you're actually serious about trading options. The cool thing is you get into a Facebook group that we're all in, that you get to see some of the trades. You get to, like, it's a lot of hand holding through it. So that's nice about that program. If I had a program myself, I'd recommend it. I don't. I think Erwin's doing a great job at focusing on that. So I'd rather just refer him people and just have you go and take his stuff. So once I finish his course, I'll tell you how it is. I've perused it a little bit. I have access to it. I got to do it. But again, I'm just the kind of person who's like ready, shoot, fire. And I haven't really done all the studying. I should go and study all the proper options. There's lots of different option trading strategies, or options to pursue within the options trading strategies. So yeah, check his stuff out. I'll put a link after in the comments once the video is published, in the comments for you to click if you want. I don't even know if the link works. Just tell Erwin that when you buy it, just tell him that Mike Rosehart sent you, and maybe he'll take me for lunch or something. Nicholas says, hey Mike, great channel. Have a question on refinancing. Want to pull equity out to use towards a down payment for another property. What do you ideally want to refi? Is there a best time? Or sorry, when do you want to refi? There is no necessarily best time. Properties look best in the summer and the spring. They don't look as nice in the winter, but that only affects value by maybe 5%. So I would say the best time is if your property is vacant and you've just cleaned it up. That's a great time to refinance, because you bring the appraiser through and get top value. Otherwise, during COVID, they're not even doing inside inspections right now on occupied units. And so just get your best pictures from when you last renovated it and say, hey, it looks just like this. Maybe take a couple pictures to show them it still looks good like that, and then submit that. And hopefully you can talk to your appraiser about, suggest some comps that might be good. And you can get a great refinance, pull that equity out and put it to work tax free. That's the beauty thing of not selling the property and just refinancing. So I have a knockoff version of Invisalign, if I'm being honest. These are, I think you guys can see this. This is my first tray. I have 2 trays in right now, and I got a super deal. So instead of paying I didn't want to say what I paid, but you guys know I didn't pay retail. I got a really good deal on it. So for me, it was really worth it. I negotiated a couple extra trays, and you know how Mike Rosehart is. I'm the negotiator king. Drew says, I'd follow you on any platform if it helps make me money. Love it. If you make those IB videos, it would be gangbusters. Cool. Maybe I'll do that. If you follow me on Instagram right now, I've been just doing screenshots. I've been making like $10,000 a day right now, and I've been only doing it for a couple weeks now, but it seems like it's a fairly lucrative strategy. If I can make 2 to 5% a month, I'm super happy with that for the amount of time I have to put in, because on autopilot I can make 1% a month, right, with a dividend portfolio, super conservatively. Puts and call information you have explained is something I have never done. Do you have to? There you go. A lot of people just don't know. And so as long as people don't know, there's an arbitrage out there. And so eventually everyone will know and there'll be less profit in it. But right now there's lots of profit because people buying your options you're trying to sell are often speculating. And those speculators, they're willing to take huge risk. And it often doesn't pan out for them. That's why if you're the seller of insurance, you end up winning in the end in most cases. Do you think the economy can turn into stagflation, high prices, and low economic growth? Raz, I don't know. It's possible. It's definitely, some days I wake up listening to people like Peter Schiff and I feel like it's very, very possible. And then other days I wake up and I see some of the articles where we're going with AI and the advancement of tech and the ability for tech to be so much more efficient than we are. Like, for instance, I saw an Instagram clip the other day of a pizza store, I think it was in Prague, that you could order like 40 different varieties of pizza on a touch screen. It makes a pizza in a freaking vending machine. Like, it's like this giant vending machine, but it like puts the toppings on, cooks the pizza like flame roasted, it's super cool, and it comes out and it's a beautiful looking pizza. So that eliminates, and normally now I go to the pizza, I had pizza tonight, we went and ordered pizza out, and it took 2 staff probably to make my pizza. 1 to order it, 1 to make it, and then even delivery person, whatever, 3 staff to get pizza. That's like $40 an hour. If a computer can replace that, and AI can replace that, we can be way more efficient. And if we can be more efficient, we can produce more GDP for less input. And so I like that longer term, I think we're gonna move towards more of for the bottom tier, people who are unskilled, there'll be a universal basic income. And then for people with capital, there'll be tons of opportunity to invest in machinery that makes us more efficient. So I think for the next 20 years at least, we're on a huge curve for tech to carry us through more growth, especially in the service sectors. So I think we can continue to grow, but it's possible. It's possible for sure. Prices are going up no matter what. They're printing money. So fiat is increasing right now, and they're keeping interest rates low. So I think inflation is very likely. Do not be in cash right now. I repeat, do not be in cash right now. I made the mistake of taking my parents' advice and never investing despite being the same age. Yeah, so my parents weren't really, my dad dabbled a little bit. I'd seen him invest in real estate and I watched it fail. He went through a divorce. He got up to 6 properties, believe it or not. I didn't live with him at the time. We were sort of estranged. I saw him on weekends here and there. But my dad was sort of a little bit of a mentor for me. I saw where he failed. So I saw him go from 6 properties to 1 property because he had been through divorce and lost everything. He said to me things like, I owned real estate for 5 years, Mike. There's no money in it. You lose money landlording. It's a pain in the ass. There's no appreciation. And so I grew up hearing that real estate wasn't a great thing and that stock investing was, again, very risky. My mom was always telling me stuff like that. So I had, again, not a great mindset when it came to money. But then looked on how to improve, right? It was like, what did my dad do wrong with the real estate investing? Or what did my mom do wrong with the penny stocks? She used to buy penny stocks. She made minimum wage, so she was just trying to invest a little bit to help us grow, and she lost everything pretty much investing in penny stocks. But learning from where they failed, right? And going online and saying, hey, people are investing and they're building wealth, and that's allowing them to retire early. I want to do that too. Okay, cool. Congrats, Mike. Thanks. Appreciate it. Yeah, sorry. Bull market, everyone's making money. Exactly. That is true right now, crypto. 100%. Everyone is making lots of money. The thing is, though, sitting on the sidelines is worse than being part of it. So I would rather be part of it and buy insurance and protect myself against the downside. So buy some puts to protect your portfolio. 10 years from now, all the prices of everything will seem cheap. Just keep that in mind. 10 years from now, everything's cheap. So long term, time heals all wounds, even on bad investments. So just stay diversified. Don't put it all on red. Don't put it all in GME. Don't put it all in crypto. Spread it around and you'll be just fine in the long term. Anyway, everyone, I gotta go upstairs. My daughter's bedtime right now. So remember, the secret to unlocking wealth through you is 3 levers. Spend less, earn more, and maximize returns on the difference. And lately I focus mostly on maximizing the returns because I've done all I can to spend less and I already earn a ton. So I think that's the places you start, and then you evolve once you built up some net worth into maximizing those returns. So anyway, everyone, I'll see you all on Instagram at Mike Rosehart. I'll see you in the comments on YouTube, and I'll see you next week live, 7 p.m. Eastern Standard Time for the Mike Rosehart Show on every single Wednesday. Spend less, earn more, maximize returns. Have a good Wednesday, everyone. Bye-bye.